Hello and welcome to Rocket Fuel, your daily-ish update of everything that's happening in the Rocket Pool, Ethereum and crypto spaces. My name is Wack. Today is September 30th and today's episode is going to talk about a new vault launching on rETH, which is really exciting, hugely exciting. We're going to be talking about ETHA development from BlackRock, about staking ETFs. That's going to be interesting. We're going to be talking about some FUD on Ethereum, Blobs, a whole lot more, lots of exciting stuff. Let's get started.
10, 9, ignition sequence start, 6.
Okay, so the first thing we're going to be talking about is this project right here that had kind of been talked about in some spaces around the Rocket Pool community, for those in the know, but it wasn't public. It was a stealth project. Well, a few days ago before launch, we started to see some movement happening, and there was a tag here from some rETH that was moving, and it had an ENS attached to it, which was RockSolid network.eth. So people were just like, hey, what's this? Like, who's this address? Who's this sender? It turns out that RockSolid is this protocol right here, and they had a vault, and they had something called Rock rETH, and people were just like, okay, so there's an announcement that's kind of been brewing, and this is something that is going to be a thing. And what's the thing going to be? And it turns out it's this RockSolid rETH vault. So there were some traces, some hints about it kind of going around in the community, and people were like, hey, what's this going on? And then we had an official announcement from Dave, who we haven't seen in Rocket Pool Way in over a year. Dave, the previous time that Dave had been in the community was to make an announcement, and then Dave hadn't been around for basically over a year. And now we got Dave here saying, just shows you how big a deal this is, that, it brought Dave out of hibernation. Well, not hibernation in terms of protocol work, but hibernation in terms of being in the community. So Dave says, hey, everyone, we're excited to share with you that Rocket Pool is partnering with RockSolid to launch the first official rETH earn vault. This partnership has not yet been announced publicly, as wanted the Rocket Pool community to be the first to know and had the chance to try it out early. So they said that the vault is designed to give rETH holders simple access to tailored DeFi. And the way this works basically is that there's a vault, you deposit your rETH into the vault, and then the RockSolid team goes and does stuff with that in DeFi. Right now there's boosted yields, there's some really cool integrations that they're working on, some really cool stuff. So if that is something that if you're an rETH holder, and if you're interested in putting your rETH to work, then doing that with RockSolid is a very interesting way to go. Now, RockSolid is a brand new protocol, like I just said, so they there's a chance that you could lose what you put in, like with all DeFi projects. However, they've been audited, and their contracts, the partners that they're working with are battle tested, and hopefully, your funds will be safe. Also, not all of the money is going into one strategy. It's going to be going into multiple strategies to kind of divide that out. But yeah, the rewards are looking good. And then they had a community call on the 25th as well. And by that point, most of the people in the community knew about it. There's also a new thread that has started called RockSolid Vault that you can join in that channel. And here you can see that, there's an announcement from Paladin and Pasta Master. They're the two founders of RockSolid. They giving information and answering questions about what it is and what they're doing. And yeah, so here they've got news of $150,000 of incentives to their vault for early depositors, and you can earn over 20% in rETH terms as a reward right now. And here there's some charting of how it's going to look in terms of getting that yield. But it's looking really good. So yeah, definitely, if you're an rETH holder, and if you're wondering what you should do with your rETH, then this is one of those places where you could put it and earn a really nice passive yield. Now they charge a fee on that yield. There's a 1% annual management fee, as far as I know, and a 10% fee on your profits that they earn, which, as far as I know, is quite standard in terms of fee. But they are hoping to kind of use their size, their hopefully many tens or hundreds of thousands of rETH that they'll have in there eventually. They're hoping to use that size to leverage extra incentives and extra rewards from DeFi protocols and places where they can deposit things. And hopefully, I think the kind of stuff that they want to talk about is if there's any airdrops or any of that kind of stuff, they can make it eligible for their pool holders and get them earning some of those extra dollars, which is really nice. Let me just close some of these because my computer doesn't like that I have so many tabs open. And then I actually had them on Rocket Fuel on the 20. Let me see when that was. Last week, 3 or 4 days ago, I had them on Rocket Fuel, and they made the announcement of what they were talking about. They kind of gave a walkthrough of their protocol. It was really good information there if you are interested in figuring out what's going on, and if you're not sure what to do, there's a step-by-step of what buttons to press. You can interact with their front end. You can interact with the Rocket Pool front end as well, because this has been integrated into the stake.rocketpool.net website, where you can press a button and boost your yield. So this is really exciting stuff, like really cool stuff. So definitely have a look at it, at least if not take part in it. Okay, next we've got some news here from Jasper, and Jasper's highlighting another way of earning on your rETH, which is the theme of today, I guess. So here Jasper says that there's a huge APR on rETH on Unichain. If you want to do that, you can get 20% APR right now by providing liquidity to the very stable rETH ETH pool, and this is in partnership with Uniswap and of course with Alpha Growth. As far as I know, they're the ones who are working with this, so they're putting money towards this to try to boost some liquidity for rETH. Their TVL is 1.27 million at the time that Jasper put this out, and their APR is about 25%, which of course is huge. Let's see where we stand with that right now. It's down to 12% right now, which is still decent. Not 11.3%. Their TVL hasn't gone up that much, so I guess it's just they're tweaking their rewards that they're giving. But there's OP rewards coming in there daily, about nearly 600 OP, and it looks like there's going to be another 7,000 OP coming in there soon as well. So you can get some nice yields by taking part in this pool. Okay, next we have some very exciting news coming out of SBET. So this is SharpLink, and they are the Ethereum DAT, ETH DAT, that was set up by Joe Lubin, and they have basically put their shares online. So here there's an announcement from them saying SharpLink is partnering with Superstate to issue tokenized SBET shares directly on the Ethereum blockchain. SharpLink will become the first public company to do so. Together we'll work to advance how tokenized public equities can one day trade on automated market makers and other DeFi protocols in a fully compliant way. So it says SharpLink has always been Ethereum aligned, and this step reinforces our mission to advance the Ethereum ecosystem and modernize capital markets. It says the asset is ETH and the ticker is SBET. So this is actually really cool to see that they're taking these steps to bring SBET on chain. This is what we want to see, right? We want to see all the world stocks being on chain like this. So there's a couple of different ways this can happen. One is that you have a representation of the stock, like it's settled still in the TradFi markets, but you have a token representing that on chain where you can trade back and forth to whitelisted actors, and then if you want to redeem it or claim the actual token, you have to go back onto TradFi rails. The second and much more exciting thing, and the one that we'll hopefully be seeing in the years to come or months to come even, is companies putting their stock natively on chain, so it won't be on any TradFi exchange anymore, like the New York Stock Exchange and Nasdaq and that kind of stuff. It will just live on a crypto native exchange as native tokens. I'm sure they'll have rules, the SEC will have strong rules about how you can whitelist and all that kind of stuff, and token accessibility. But the reality is that I think that's the future that we're heading towards. And I think that would be really, really exciting to see. So yeah, it's really cool to see that SBET taking this step, partnered with Superstate. And I'm excited to see much more of this happening soon. Okay, next we have some very curious news coming out of BlackRock's ETHA ETF, which is the Ethereum ETF. Now, it says that they've actually been told by the SEC to withdraw their 194B application from this. Now, what does this mean, right? So you might be thinking, hey, that's a bad idea. Like, what's going on here? Well, a couple of weeks ago, the SEC said that they are putting new crypto ETF standardization system in place. And what that will do is it will make it so if a crypto project, a token, hits certain criteria, then it will automatically be eligible for having ETF. And a couple of days ago, we got news that a bunch of different ETFs that were in the later stages of applications, like Litecoin, Doge, and a few others that were very, very close, to their final deadlines. They've all withdrawn because of the SEC saying that we want you to come under these new guidelines. Now, here, JRAG says they've withdrawn. So this is BlackRock's ETH ETF. So they're saying that turning into a staking one, since they've withdrawn the 19B4 form at the demand of the SEC, so they can go through the new generalized crypto ETF process. It says they'll probably be approved and launched in October. So that's actually really, really exciting to see. And here's a screenshot from the SEC's documentation, or BlackRock's documentation, saying that it got withdrawn on the 26th of September. It says notice of filing is proposed, rule change to amend iShares Ethereum Trust to permit staking, and that's been pulled. So this is because you might think, hey, like, why has it been pulled? But it's been pulled because they will come through the new framework, and with the new framework, they'll be automatically approved. There's no need to go through this long-winded process as long as they meet all the criteria, which I guess they would be meeting for BlackRock to agree to this for this happening. So it looks like we'll be getting the ETH staking ETFs within the next days or weeks potentially, but definitely at some point in October. And it looks like this is going to be one of the things that's going to form the foundation of October for Ethereum, which I'm totally excited about. Okay, something I was not excited about is to see a lot of drama coming from Max Resnick. Now, that's a name that you guys might not have heard me mention since around January, I think, or maybe even December last year. Max Resnick was one of the people who was arguing for a more performant Ethereum L1, saying that Ethereum needs to become basically a much more scaled up version of what it is right now. Like, home stakers be damned. He ruffled a whole lot of feathers in terms of making those points, including telling people to like piss off being home stakers in a really offensive way, and just he basically was being an absolute arsehole in the way that he kind of presented himself. Well, now it looks like he's coming after Coinbase and Base. Of course, Max left the Ethereum ecosystem. He used to work at Consensus. He left Consensus and started working at Anza as the lead economist at Anza, working on Solana ecosystem stuff, kind of becoming like a Solana core researcher, core dev kind of person, equivalent of the Ethereum, I guess that's what you could call him. Anyway, he ruffled a lot of feathers last week when he said that Base is operating an exchange and this is like, TradFi exchange, basically, by the way that they do their sequencing, and it's not crypto, and it should be regulated by the SEC, and basically pulling up all this stuff. And then, this prompted a response from Paul Grewal, who, of course, is the chief legal officer of Coinbase and, involved in all those big lawsuits. And Max basically got shit on by a whole lot of people from Ethereum, showing that he didn't know what he was talking about. And David Hoffman, actually, who was previously kind of friendly or friends with Max, says there are some fights on crypto Twitter that are fair grounds for tribe versus tribe warfare. Then there's some fights that are strictly net negative and to the detriment of the entire industry. He says, let's not fight our industry peers about securities laws. On the securities law front, we should be united and help each other to win whatever possible, because wins here will spill over to the rest of the ecosystem. So basically what David Hoffman's saying is that is that Max is basically trying to sick the SEC on other crypto companies and basically like, what the fuck are you doing? Like, that's just really, really bad form. And then he was Jesse replied as well, saying like, this is not any kind of centralized exchange. Like, this is a code based sequencer. Like, and then he was trying to FUD about that as well. And then people were just like, what the fuck? Like, so Vivek here says, interesting. So regulatory capture will be your game. Solana is decentralized, in quotation marks, despite validators colluding in Discord to restart after outages, but everything else, including hype and L2, should be held to a different standard. He says, you're making a lot of enemies, have fun. And then there were a lot of other people as well kind of saying, have fun playing regulatory whack-a-mole when it's your turn next. Like, other people saying this is such a stupid argument for our entire industry. And basically just calling him out. So there's been a lot of FUD around Ethereum, around Base as well, because Base is the biggest L2 on Ethereum in terms of activity right now. And, it makes sense that Solana bros are threatened by it. So they're trying to attack, even though that is a really, really dumb thing to do. So, yeah. Okay, so talking about active and L2s, here Hildobby was talking about how we have hit 6 bases per block for the first time, and he says here's a quick update on the current block usage, blob usage, and you can see that the spikes now are touching 6 blobs per block, which is really cool. The current limits of blob availability is 6 as the base and then 9 as the extension. If we have a look at the actual dashboard that Hildobby put together, you can see that in the last 5 days, there have been many moments when we've sustained higher than 6 blobs, spiking up to as much as it looks like 7.5, those kind of numbers here, which of course is really, really awesome to see. But this is just awesome. So you can see that on the shorter time frames, we've been hugging that 6 blobs per block number quite a bit. But it's been like kind of not quite hugging that limit the whole time, but starting to kind of flirt with it, which of course is really, really cool to see. What's really funny though is that well, actually, let's just have a look at who's actually posting blobs right now, and you can see that in the past 24 hours, the 2 main chains that are posting blobs are Base with 504 blobs in the past 24 hours, and World Chain actually with 426 blobs every 24 hours, and then Arbitrum one after that 115, and Scroll with 117. So they, the most of the activity is with Base and World Chain. But you just need a few of these, base level rollups to exist, and all of a sudden you'll see that amount will be, hitting sustainably so and persistently so. And there's some really, really great thoughts out there about, blob usage and what it looks like when you have many, many L2s and all of them are doing some activity. The fees stay low, but the burn actually looks really, really good from that. So there's definitely some stuff going on here, which is really exciting to see. And, I'm definitely cheering that on. But what's really funny is that just as in the past, towards the end of last year and into the beginning of this year, before the most recent hard fork, Denkun hard fork, we had, let me actually change the view so you can see it. We had blobs hitting that 3 blob target, pretty much consistently, and then going into that higher rate. And there were some games even played around with when blobs were posting data and all that kind of stuff. But we were hugging that. And now, just as we're getting to the point where we're going to be hugging 6 blobs per block, and going above that on the extensions, up to 9 as the limit, we're going to then get POAP coming in the next hard fork, which is going to massively scale up blob availability, and then we're going to start the whole thing all over again of getting back up to those positions. But I think that in the future we'll be in a position where fees are going to be dirt cheap. Transactions are going to be high, transactions per second are going to be high, and even with all that, we'll be getting Ethereum burned on mainnet, which would be really, really cool. So that's awesome stuff. Okay, next we have the Degen 1, which is a wallet that I've talked about on Rocket Fuel before, this is now actually being shipped out. So they're saying, meet the Degen 1. This is the hardest hardware wallet in the world. It's available globally today to users in our store. So this is quite expensive. It's about $550, I think, or $600, somewhere in that kind of range. But it's actually like a small phone. Pretty much you can actually put a data or even actually a SIM card in there, if I recall correctly. You can put a SIM card in there, or you can put like a data SIM in there, and it's just like a crypto native device that has crypto apps on there, crypto uses. Some of the videos are really cool. It's actually got a hardware wallet built into it with fingerprint scanner for unlocking your wallet, and it's just a really, really cool device. I think that they're going to try to do partnerships, so people who hold the phone, the device, sorry, the everyday carry device, not a phone, will get some kind of airdrops in the future. That's what happened with the Solana phone, and it proved really successful, and they've not really denied that that's going to happen with this as well. But it looks really nice. They've got a whole bunch of really cool things, and it just looks like a really nice hardware device. So yeah, you should get one. It's really cool, and they're starting to ship now, so you can actually just buy one. You don't have to go the NFT route like people had to do before. You can just buy one on the market now. So if you want one, go get one. Okay, we know Devconnect is coming up in just over a month, I think 6 weeks, something like that. So POAP here are setting up the road to Devconnect. And here it says, planning your trip to Devconnect, have burning questions you want answered by experts. So on October 10th, there's going to be a call on the ETH Staker YouTube channel where Patricio Warthalter and Anthony Sassel of the Daily Gwei will be making themselves available to ask and answer questions about Buenos Aires. Patricio, of course, is Argentinian. Maybe he's from Buenos Aires, I'm not sure. Probably is, but they'll be there to answer questions. Of course, it's a POAP event, so you should have POAPs available. And it says there's a surprise raffle in POAP.now, so there might be some dollars available for people who either submit questions or people who attend and get a POAP. So if you are interested in that, I love POAPs. Take part in that, and you'll learn a lot about Devconnect, but also you might win some cool prizes. Okay, moving on to some other news now, away from crypto stuff, and we have news here from the CFTC, and they are going to start allowing stable coins as collateral in US derivative markets. This is the first time ever. So here, Bips and Bips are saying that this historic shift, stable coins moving from crypto rails to the core of TradFi infrastructure. So this is the kind of thing that we're going to see happening a lot in the coming weeks and months. This is stuff that these companies have been working on for many years, and I think there was a lot of hype in 2020 and 2021 that all these TradFi bros were going to come onto crypto rails, and then there was hype, and they put some effort towards it, but then they kind of died down. But now with the Genius Act passing for stablecoins in the US, and it looks like clarity maybe passing before the end of this year or some point early next year at the latest, we're going to have a much better understanding of what you can and can't do with crypto in TradFi and vice versa. And because of that, I think a lot of these companies that were previously wondering how things should and shouldn't happen, they're now willing to take the leap. And this is actually a really, really big leap. So the great thing about stablecoins is that, on the underlying, you have US short-term treasuries, and the rates for those are, like 3.54% or something along those kind of area right now. So you're holding your stable coins. You can get yield from that as rewards or whatever, like kind of convoluted way that you want to get that, and then by holding those in the you're using them in the market at the same time. It's very much like LSTs kind of, with a yield baked into it and then using in DeFi on top. So I think this might be like a TradFi version of that, where everything will eventually become stable coins. Like there'll be no need to have cash, because cash just sits in your bank, and your bank actually makes money on the cash by giving it out as loans and all this other kind of stuff. But when it comes to stable coins, those are backed one-to-one, as of Genius Act, they're backed one-to-one by US treasuries, and that money that they're earning, right now rates are high, so they're earning about, like I said, 4%, but even when rates go down in the low rate environment, you'll be seeing them, earning 1%, 0.5%, something along those kind of lines. And what you'll see with that then is that it'll be a far superior product. So any app that you use, any kind of shopping network that you use, like Amazon, Walmart, any of those kind of things, they'll ask you to opt in to their dollars. Amazon dollars on the back end will be a stable coin. Walmart dollars on the back end will be a stable coin. They'll probably partner with Circle or JP Morgan or, Wells Fargo or Bank of America, whoever, or Tether, even like now with the US branch, they'll partner with those people to kind of like provide them with a white label stablecoin, and they'll just either keep the fees for themselves or they'll give a portion of it to their users, and it's just a much better experience for everyone. So that is definitely something to look forward to, and I'm going to be really curious to see how that works out in the next couple of years. This is the kind of thing that when you actually sit down and think about it, like it just makes so much sense. And then when you think about how these stablecoins are coming on Ethereum, like the vast majority of stablecoins are on Ethereum, right? You can't help but think that, the stablecoin economy on Ethereum alone is going to go up to, the trillions of dollars. And then you have to think to yourself, like, what is that going to do to the price of ETH? I'm pretty excited about it. Okay, and finally, we've got more news out of the US regulatory environment. And here it says SEC to create new rules to allow crypto companies to launch products in the US without having to comply with previous regulatory requirements, calling an innovation exemption. So this is actually a really big deal because what will happen here is that crypto companies will feel safe and comfortable launching in the US now in a way that they didn't in the past, and they're going to be getting some regulatory exemptions where they'll have a period of time where either they're going to exist in a kind of sandbox environment, or they'll have some kind of safe harbor period before they have to comply with something like Clarity Act. But just because the rules haven't gone through in the government yet, it doesn't mean the SEC can't start changing policy, and it looks like that's what's happening here right now. So I think this could lead to a huge boom in companies coming to the US and starting their projects and crypto projects in the US. So huge stuff is always happening all over the place in crypto. And by the time you guys watch this, it will be October in most of the world. I'm hoping that the next month and the next months ahead should be an exciting time for all of us in crypto. I'm ready for it, and I hope good things ahead for all of us. So I'll be here every day, well, ish, and I'll see you soon. Bye.